Hello traders, welcome to Investoo.com's how-to series and this module oscillators. In this lesson we're going to review the average true range or ATR. The ATR is an oscillator that measures the volatility of the market. So the actual fluctuations or oscillations between the high and the low of this oscillator has nothing to do with the price movements itself. Now, in this example, we have a 14-period ATR, which means that this ATR is calculated with the past 14 bars. Now, I'm going to show you how this indicator shows you periods of high volatility and low volatility. First of all, you already know that a period of low volatility is a period where the candlesticks are just or price action is just in a range and candlesticks are very tiny, meaning that the body of the candlestick is not that big and the wicks are not that big, meaning that price is just in a very small range, just as in this example. And you can see that in this example right here we have the ATR going down. Okay, now let me just move this to the right side, and you can see that in this period of low volatility the ATR is actually pointing down, going towards zero. Okay, now if you're using the ATR as an indicator of volatility, this is the kind of market that you don't want to trade. Okay, now when price starts to break to the upside and we have an actual candle that shows volatility, because we have this 100 pip candle to the upside. Okay, you can see that the ATR starts to move to the upside, meaning that there's volume in the market, there's buyers coming in, and by only using the ATR and maybe just a top of the range on the low volatility period, you can trade this to the upside, meaning that your entry would have been here, and just by trading with the ATR, when the ATR starts to move to the downside, meaning that the volatility is starting to fade out, you should get out of that trade, meaning that you would have made a nice 120 pips on this trade from the entry right here. When we break with these small ranges, resistance on a increase of volatility to this high right here, when the ATR starts to point down. And this is actually how volatility is read by the ATR. Okay, and it's very common for traders or for new traders to mistake this oscillator for an overbought and oversold oscillator, which is not. And I'm going to show you why this is not an oversold, or how can you know that this is not an oversold or overbought indicator or oscillator. In this case, we are in a down move, okay, and we have a period of low volatility right here, okay, such as in this case or in the example before. You can see that the candles are very small, and we are in a very narrow range, and the ATR is pointing down, nearing the zero level. Then we have a break of these lows, and we have an increase of volatility. Okay, now this is a very good example of where this or how this indicator shows you volatility to the downside when it points to the upside. Okay, let me explain this to you. We were in a period of low volatility right here, and then the indicator or the oscillator starts to point to the upside in a very steep increase in volatility in the market, while we were breaking with these previous levels of resistance, of support. I'm sorry. Now we have an entry to go short, and just by using this ATR, you can see that when we start to to or when the ATR slopes starts to go to the downside, it means that we have a decrease in the volatility that made price move to these low levels. So we should get out right here. Okay, now this would have given us another 120 pips to the downside. So this indicator is good for momentum trades or breakout trades, okay? But you have to pay attention when this happens, because if you miss this entry, you will be chasing the trade, which is not what we do here, okay? But when the indicator is pointing down, going towards zero, you are in a period of low volatility, which means there is no volume in the market. And when we start to trade, or when the ATR starts to point up and going up very steeply, we are in periods of high volatility, either of buyers to the upside or sellers to the downside. If you want to know more about the ATR, just go to our Advanced Technical Analysis course at Investoo.com/Advanced Technical Analysis.